All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for December 28th, 2021. So before we get into today's work, I want to go back and revisit a really important discussion yesterday as part of just the routine trade that Ken H. uploaded and we talked about as part of our debrief yesterday. This is really important. This one's as important as him learning to reframe immediately. And this is also as important as the trade lesson where he learned about why you got to immediately do feedback because you forget what was on your mind at the moment of decision. And on that second one, the scenario was that there had been a gap against him, and then it sold off, and then he had to re-enter and so forth. Let me check first. Is anybody else having sound issues? All right, let's try that again. Fix the mic problem. Excuse me. All right, so this one is important because we're just going to examine a routine decision that Ken H. made yesterday on a standard trade. Nothing unusual about this. I mean, it's a really nice trade. But yesterday, this is from the 27th of December, at the 8-minute and 20-second mark, we start talking about ETHE. And in that one, we identified that there was a channel here and then a channel here, and that he had gotten a nice trade, a nice reentry, and an even better reentry. And then it had reached a peak of resistance. It had gone beyond Z3, got to this peak and started to roll over. And he had moved his stop up, I think, to here. And then the next day it opened and it started selling. And so he just went ahead and took it right here at 37.69. And what we said was, well done locking in 4.5, because in this market that is at a critical state, and given the state of that channel, we're not allowed to be surprised if this thing doesn't just routinely go back to 33, which is where it was before, or even 34, which is the Z3. So a bird in the hand is worth risking those two, especially when you're holding 4.5 at the end of a nice run that had 2 days to go further, but it didn't. So he took that exit. And then we just moved on and looked at a dozen other trades. But I want you to remember that he's got 4.5 in hand on that one. All right. So now here's what that trade looks like today after he had exited yesterday. So this is just my markup. And the trade to keep in mind was that he had this actually a 1, 2, 3 reentry here. But even if he just gets the COTA 2 entry and then takes this trade and then exits with a sniper at the PSAR flip, this is where you get that replay of the video, and then go to the 8 minutes and 20 seconds and listen to about 3 or 4 minutes discussing that trade, which had gone from here, then the reentry to here, and then the exit. And what we said, that the channel was clearly 38.25 down to about 33. And we said, we are not allowed to be surprised if this just runs back to 33 in the normal course of events. Like we said, that would be an unsurprising move. You're not allowed to be surprised if it does that. You know, you could peg 34 as the Z3, and that's exactly what it did. There's a gap down, and then a harsh sell-off right away, find support at Z3, and then is showing some evidence of a resumption with the new VWAP right here. So now this exit suddenly looks like genius in retrospect. All it was good trading practice from yesterday. That's all it was. I do want to say good genius, but it's better that it's just a good solid rule about the bird in the hand is worth two in the bush. It had, again, 2 days to break out higher than the previous RL10 and the previous Z3 excursion, but it didn't. Failure to follow through is information. So he takes the 4.5 in hand. And now, if that's 4.5, imagine what that move is. That's -5 probably. If he were to take that gap and scratch and then isn't quick on the trigger, instead of having 4.5, he could be down 5. A 10-hour swing like that will ruin your composure. So don't let that happen. So I just wanted to say, really well done yesterday, doing routine things routinely, and why you got to pay attention to these price levels. Support and resistance. It's holding the man down. The man's holding me down, man. All right. So that's what I want to say about that. All right. Back to our regularly scheduled program. Let me know in chat if you found that helpful. All right, so today we get this little formation. We break out slightly to a new 10-day high, 30-day high, all-time high. It can't hold that, and then it gives a micro sell-off here to close just below yesterday's low, or I'm sorry, just below yesterday's close, which was also the high. So this was, a pause and consolidation kind of day. Nothing to worry about, except that we always worry about everything. So if I'm still in this trade, I am not going to let it go below 476. I'm not going to do that. I'm going to respect the trade that got us to here. Right. And I'm going to lock in those gains. You had to move from Z -2 and beyond, really, from Z -2 to Z +2. Trading from Z2 to Z2, you can make a living doing that, but you got to make those decisions. All right, so let's see what else we have today. All right, so we tested Z2 and it kind of rejected. Now the 3-period hull is still up and strong. That's good. The RL30 extension is still long and strong. That's good. The PSAR gives it an even wider berth. That's good. You have the boundaries of the dragon here at 470.5 to 464, and there's the spine of the dragon. Oops. Right in there, right at the, that's also right at the 2.5% sell-off is 467. You have the 1-bar low here at 476. You have the 2-bar low at 473, which is where the RL10 is. And then the edge of the river is right here at 472. So I'm going to treat this, especially with the holiday light volume holiday trade, I'm going to treat 476.75-ish as the critical state. And I will be ready to tactically trade this down to the spine of the dragon. That's a good trade tomorrow. By the same token, if it resumes the trade tomorrow, I'll be ready to get long at 477 and add a second position at 479 automatically as it runs to all-time highs again. So there's a real strong tactical trade in both directions, set up by today's quietude. Excuse me. Hey, Luis, does that sound still okay? Just want to check. All right, well, we'll just keep driving on. All right. So today the market was down a fraction at minus 0.08. The Dow was the best performer at plus 0.3. Emerging markets, treasuries, and the Qs were down between 0.3 and 0.5, and the Russell was the laggard at minus 0.6. The outperforming sectors, there weren't many, but energy, discretionary, finance, Mexico, and oil up to 0.28. Lumber 0.55. Discretionary and materials 0.58. The other lumber up 1%. Then lithium at 1.01. And then for targets, there was only a few better than the S&P today, really just one, and that was Cliff. So today was an index day, and looks like profit taking in the other in the targets. Underperformers, fractional underperformance here in blended commodities, commercial real estate minus 0.4, S&P tech minus 0.5, Brazil, the FANGs, oil, exploration, agriculture down 0.7 to 0.9, wheat and precious metals 1.2, clean energy, S&P bio, ARC innovation 1.8, ARC genomics, marijuana, the VIX 2.5, moonshots, blockchain 3.1 and 3.7 respectively. Now the cluster of cryptos, which did so well yesterday, gave it all back today. That's blended large caps, Coinbase, Bitcoin futures, Bitcoin Trust, and Ethereum all down, 0.7, 0.8. So I think tomorrow is a even more so critical state when you have so many things underperforming, including many of the risk assets. But you combine that with the small range of the S&P, so it doesn't look like there's a lot of appetite for broad market sell-off based on today, but some nervousness among the higher flyers. All right, let's look at the traders today. All right. All right, so this is the Ultra Dial. This is David. And this is a good shot to get short. The Z3 pinch breakdown below the PSAR and failing. It sells off, gets beyond Z3. He gets the scratch. On another day, another time, I might say, let's try and get paid a little bit in here. I like the stop and reverse. You were front running the PSAR flip a little bit, and you got paid a little bit. That's like that's a 1-2-3 exit. That's good. Looking for the fake one and go two, like fake one, go two. I don't know. That's still a pretty good exit. I think where it was slow on this little rebound right here. I'd like to see you get that at the RLXD or the PSAR dot, because what you have here is you have the RL10 and the RL10 giving you that Kata 2 feel to it. And you even have, if you use the dragon, the belly of the dragon, and the belly of the dragon gives you these entries right in here. And then that gives you a fractional win, even if you wait that long for the sell-off. But even with this exit or entry here, this is kind of like a Z3 pinch breakout. You're breaking out above this Z3 and that Z3. So that's not bad. And that's a good, reasonable risk box. But when it gets to here and then gives you doji, doji, sell off, sell off, sell off, you got to be scratching that here. And then you could actually think about the PSAR flip short, or this exit off of that move is really where you want your short, right? Let's look at that one again. So rejects the Z3, rolls over, enters the dragon, gets out of the dragon, crosses the PSAR. There's the PSAR flip. So this exit is late, but that exit is where you want to be short with a risk box, something like this, to the top of the dragon or to the PSAR flip, depending on what your standard risk box is. And because you're using this box here, that's not a, that's this, a risk box like this to the top of the dragon is reasonable. Then, if you're very aggressive, when this fall goes to winter and breaks down further, that's really just confirmation. That's early to get a second position in. So the places you could think about getting a second position here is this collapsing dragon, but you're so close to that entry that would be aggressive. This collapsing of the RL10, that's a reasonable second entry. So this is reasonable, that's reasonable, that's your first entry. And then coming back to these two, this is excellent, because now what you're getting is the RL10 collapsing dragon, and you have clearly left behind this entire price structure, and now this thing is failing, as you've noted. This is a place where I would consider adding a second position, because now you got 1R in hand and you've made a new low of the day. So the place where you got to no lose plus dinner for two, that's also sort of confirmation that maybe I could get something. And then on this Z3 excursion, if you don't get this one, you might go ahead and take this one when it resumes the fail, because by this time you've got 1, 2, 3, 4R in hand somewhere around here with momentum. So that's a place to go. But staying with one is still good. And then it allows you to make an orderly exit. This is like a 1, 2, 3 right here. That's well done. And now you have the dragon bottoming out. Now you have the RL10 here and a higher low. This is where you can be getting the Kata 2. That's still not bad, but the Kata 2 could actually go here. This is still a good shot to the downside. I like that one because what you had was a big sell off, a minor rebound, and then starting to fail again through the dragon. That's a good shot. That would be a good exit. And I'd like to see you stop and reverse here rather than here. This is a good, and if this was just the exit, that's still reasonable. Good scratch. I might have tried this one like a big Kata 2 with a low and a higher low. I might have tried that one, but then I would have lost here. So there's some work to do inside here, and then some work for the future on money management entries. A money management entry. You know, if you're 4R plus momentum, go ahead, risk one of those and see how that starts. Be prepared for that as a contingency. I mean, it's, and you're actually going to see that more often on these kind of collapses than you would on the upward grinds, because when the fail happens, it collapses fast. But that's really good work today. This one I think was yesterday. A couple from, oh, no, this is today's. This is Luke. I missed his pair from yesterday. We'll get to those. So this is the Aussie dollar. And so here's a low, here's a higher low that makes this a Kata 2. He resisted the urge to enter a second position that allowed him to make an orderly sniper exit here for 1.5. Now notice that if he had the second position here, that still gives him a scratch on the second position. So it still would have netted probably 1.5. But notice that from the peak, you're losing twice as many dollars in hand as you are if you just have a single position. So while you're learning the patterns, staying with one position is reasonable. This is a good effort to get short here. So let's see why. You had a strong move. You had the P1, RLXD, the dragon has rolled over, the RL30 has rolled over. This is an owl entry to the short side. You get 1, 2, 3. I'd like to see you scratch here, but even so, I can live with a minus 0.4 as long as you make your stop and reverse here instead of here. And then this one, there's no reason to be losing minus 0.6 on that one. We should be out somewhere in here. But even so, I can live with that. I'd like to see your stop and reverse here instead of here. And then this one, dude, come on. 1, 2, 3 exit is here. And you gave back 0.4. And then that's where your stop and reverse should be. And then you should be scratching here instead of losing 0.6. So there was a 0.4 opportunity and a minus 0.6 opportunity. That's just 1R in slippage. And you're on 5-minute charts. So we got to tighten that up. And I might say, yeah, well, span of control. Yeah, well, that's the issue. We got to work on that. So Kata 2, PSAR flip, good entry. So he's hitting that declining PSAR. That's a good entry. And he takes his wrist box to here, to southern skin of the dragon. Because he's on the 5 minutes, he can be there instead of having to go all the way down to the PSAR if he wants. So this one, good way to resist the urge. And then this was like a 1-2 exit to get paid to cover up that sloppiness. So that's still pretty good. That's some good learning on expanding your span of control. Oops, oh, darn it. Needed to show yesterday's. So this was yesterday's Ethereum. Let's take a quick look at that one. Well, that's why you wanted me to talk about it, because you get 7. Fair enough. All right. So Z3 pinch. This is probably a COTA 2. Nice entry. Perfect exit. Good effort on the short side. Tries the long. Little slow on the back take. So this is okay. That's given back too much, especially when it rejects right at the VWAP. So we should be able to scratch that. But that's a great stop and reverse. Nice orderly cover. Stop and reverse was a little slow. That should be here instead of here. And then that would give you an extra probably 0.3. And then I'd like to see this at the PSAR rather than all the way here. Still a pretty good stop and reverse. This is where I might have tried a second one, because you've cleared this one for sure. You had the moment of hesitation, and then it's starting to fail again, and then you could lock that in. Then this exit should be at the PSAR, and then that should be your stop and reverse, which you did get, which is nice. Got paid, good reentry. Might have been a bar early. Might have been able to go a bar earlier. That's a good one. Pretty good work. He's working to 300 ticks right now rather than the 5 minutes. So this is a chance, to compare those two time frames as he's sorting out his preferences. All right, this is the Aussie dollar from yesterday for Luke. This one's pretty good. Z3 pinch, breakout to the upside, good sniper exit, good stop and reverse. Good second position on the rollover and fail. And nice cover. And this is him on the 5 minute. The Aussie dollar on the 5s feels like a real natural position for it. This is a good effort on the an SSC. It didn't work. So let's get that stop and reverse, especially when it's aligned with the long big move of the day in the currencies. Let's make that a stop and reverse there instead of getting short, although that's still a really good entry. And then this is another one of those when it has made a real clear new low of the day, either here or here. And this is where it went to the winter. So we might take that as a second position. And then your 1, 2, 3 exit is here instead of here. And if you're on 2 positions, that's almost a full R. Still pretty good, 14R yesterday in these new symbols that you're learning. So it feels like the experiment is working pretty well. Here is David with the and this one is going to be XOP, oil and gas exploration. One, 2, 3 entry off the open with an exit. Feels good to get paid early. Boy, you got that right. So there's a 1, 2, 3 with a little bit of slippage. He gets to no lose plus dinner for 2 pretty quick. On this excursion up, he gets that to no lose. He kind of He locks that in. Didn't give back too much. That was almost a 1-2 exit. I like this retry. That's still pretty good. I'd like to see you get short right there, though. I don't mind you waiting for it to break the Bollinger Band mean. That's still really good. I like the aggressive second position when it is breaking out of the river. And then this is a 1-2-3. Now, what I might suggest on that one is if you see this and this is starting to reverse, that's still pretty good. You got paid on the second position. That's a great stop and reverse. It goes winter into the spring. You added a second one, got out quickly, tried again, got out pretty quickly. I think that could be a stop and reverse because now you have a high, a lower high, and this exit is now, you're looking for this. Still, that's pretty good. I think you got chased out of the position, and yeah, correct. That's where you want to re-enter, as you note. You'd have gotten paid in here. This is a good scratch. So that's really good work in the morning. Jiminy crickets. That's really nice. This was probably getting reset in through here. But you got that Z3 pinch happening. Yeah, it's decaying slightly, but it's not really collapsing a lot. And so that's really good job picking up on the fact that this sideways channel, heading into lunchtime, that this thing is collapsing. That's great. And that's a good second effort and a better scratch. Good stop and reverse. Got paid. That's pretty good work. Almost 5R. I'm liking that. Yeah, XOP is a really good trader. All right, here's XOP in the afternoon. This was more of a grind. And what he has to contend with here is this is sort of an effort on the long side. I think a little slow getting back into this. I'd like to see you getting this at the breakout from the river, if not crossing the Bollinger Band main. If you don't get that one, I'd like to see you get this one, but still that's good because you're front running the Z3 pinch. Now, after 7 bars of no failure and then starts to reverse, I'd like to see you scratch. I like that effort. That's a good scratch. And I think you could get short there. It would have been, which you did. That's an unfortunate -1. I'd like to see you get short on a collapse here. Still, that's pretty good. Maybe gave back a little bit. That's still good. And now you kind of settled in for a COTA 2 entry. This would have been the initial urge on the long side. But after the move down for the day, I like waiting for the COTA 2 on the reversal. And that really paid off for you. Where I'd like to see you add is here, where you have the Z3 pinch coming into the afternoon session and a Z3 pinch breakout. So that would be a little faster than this. And so now instead of 1.4, that probably would have been 2 because this one pays off, whereas this one gives back a little bit. That's a good re-entry on the Z3 pinch. I like the scratch. I'd like to see this happen a little sooner here because now you have these rising lows happening in the RL10s. So I think we could get this, and then that becomes a really nice trade. This was a good effort on the short side, and that's about a reasonable exit. So 6.25 for the day. I think with maybe a little bit of refinement in there, this could have been as much as 10, but that's really good work in energy. Nicely done. All right, we'll go to the to the daily. So we're still in bullish normal. We gave back a little bit today on the 2-period, but otherwise strongly overbought. Let's keep that in mind. There's still this upward urge, and the risk Z is still got room to go for an exaggerated move to the upside at all-time highs in the holidays. And people looking forward to the January effect or the Santa Claus rally, who knows? So one day at a time, start with the intraday. Your big winners today were the non-sexy things like Coke, Diamonds, Procter and Gamble, Walgreens, IBM, and some of the more specialty players, as we saw from the sector, were losers today. Tons of dojis. That's a market that's at a critical state, and that's why I want to start it fresh. I like Home Depot at 2.3 to 1, and Johnson Johnson at 2.5 to 1. Handful of dojis in the ETFs. Only one auto framer at 3 to 1 was Brazil. I like that just because it's a great frog champion, and it has been underperforming in every time frame, and every dog has its day, and there's a 3 to 1 on a symbol that trades well with a frog, with a hybrid frog box in the morning, and could lead to a nice swing. So I would be stalking that one. And I also think clean energy falls into that same category. Only a handful of auto framers, as we said, with today's very constricted range. Lots of daily squeezes. That's the least surprising element. When the entire market scrunches into a really tight range, then it's not surprising when the individual components also squeeze into tight ranges. And then what you're looking for there is a mechanical entry that breaks out of yesterday's high or low, and you follow the price. And then if it just moves a range stat, then these are the kinds of reward to risks you get for a one-day pop. So let's take a look at some of those. You have the S&P itself, you have oil, and you have consumer discretionary. And remember, that's made up of the three biggest ones are Amazon, Tesla, and Home Depot. That's why I like Home Depot in this one. I also like Microsoft, but Home Depot is ready to move also. But you can get that with XLY. Brazil's ready to pop. Tech. So tomorrow, I'm expecting a nice tactical trading move intraday. And this is the chart that I'd be using to prioritize my gains. Really nice recovery. These last 5 or 6 days has put us predominantly in spring and summer. Lots of these are the winners here from today. Let's keep that in mind for the sectors. I like consumer staples. Greens across the board. This is the natural pause after a 5-day run up. But again, I'm going to be very strict about locking in my stop there around 476.5. I am not going to give back much of that. But I'm ready for an upside move. And we are still in early days of this, like a Kata 2 formation in the slope of the RL30. And again, early days. I like that it is the little dragon, almost looks like the Loch Ness monster, doesn't it? It's coming up out of the river and is ready to stream forward. Let's see that tomorrow and enjoy that move. All right, that's everything we got for today. Let's get this published and posted, and we shall see you tomorrow, ready to rock.